Yep. Hi, good morning, everyone. Thanks for joining our Phillip Security Weekly Morning Call. Today, we have two Phillips on the ground for our stock counters update and also some technical analysis, which will be covered by Zane, followed by our macro portion, which includes our third quarter Singapore equity strategy summary, our banking monthly, Singapore bonds volume recap for the first half of this year, and ending it off with our usual Singapore weekly. So I'd like to pass on the time to Paul to share more on the banking monthly on behalf of Glenn. Thank you. Paul, are you muted? Sorry, give us a while.
Okay, I think I'll be presenting because Glenn is in the presentation. So let me just start off with the Singapore Banking Monthly. Apologies. This is Singapore Banking Monthly. Glenn is supposed to present, but I think he's in the OCBC briefing right now. So let me just start on with it. So in terms of the key highlights of Banking Monthly, the purpose of a Banking Monthly is just to update investors with all the latest indicators that we can get. So right now, the first one is that the 3-month SORA used to be SIBOR. It continues to flatten. So if you focus on the orange line, it's a bit harder to see, but the orange line is starting to move sideways, despite the rebound in the Fed funds rate. If you focus on the red line, which is the US Fed rates. The other thing to note is that the 3-month HIBOR continues to recover. So HIBOR, why this is important and why we're using HIBOR is because of some of the local banks exposure in Hong Kong, namely DBS and OCBC, which also mentioned they had some weakness in their NIMs because of the weaker HIBOR. So as a result of the rebound, I think we still expect strong NIMs to drive earnings for a second quarter of 23. As you can see, on the third bullet point, the second quarter SORA is, even though it's stabilized, is still higher than the average of first quarter 23, which is 3.2%. Next slide. The weak spot we have facing the banking sector is mainly loans growth. So loans to Singapore residents, including US dollar and Sing dollar loans, is down about 5% year on year, and it's across the board. Mainly business loans is down 7%, and for consumer loans actually down 1.6%. So I guess the business loans is a bit more worrying. It's also a reflection of economic activity. But in general, for an economy, of course, it's never good when you have loans contracting. It's not a good sign for the economy when loans are contracting. And the only one positive is that CASA. So CASA continues to be stable at 18% after 14 months. So this is also another important ingredient to maintain Singapore bank margins. Just to refresh for everyone, the two biggest assets that a bank has right now that is supporting the margins is, firstly, when the interest rate rise, the first asset they have is that they can reprice higher. So unlike in the US banks, a lot of the loans are fixed rate. So even though interest rates are high, they cannot charge the customers, basically charge all of us higher. So that's the number one strength. And the second strength is CASA. So CASA means zero interest rate, basically free money in a way, apart from cost to manage the branch, but so that has been declining, and that also will impact the margins. But that's starting to stabilize. So that's why we say that the stable CASA is another positive. So next slide. This is just a reflection of the activity. For SDAV means securities activity. So it has been particularly weak. So the only reason why although we still like SGX, because we think the high interest rates will definitely give them a huge, probably like a 15 to 20 percentage points jump in earnings just from the interest. But the problem is only the volumes. So volumes for SDAV, which is stock market volumes, is you can see for the June quarter is weak. So April -24, then May -31. Then likewise for the derivatives, which all dependent on volume, so that's also been weak. So one of the things that's holding us back to make it a more compelling buy for SGX is because of the weak securities and derivatives volume. And it's also weak in June. You can see in June, year on year, we don't have the full number. So that's why the table on the right, we take the most heavily traded volume, which is the China futures, Nikkei, and so forth. And that's also down 21%. The one part of the business which we can't see, so for SGX, you can think of it as the stock market volume and derivatives volume, and the OTC part, which is a lot of it is the FX, which we don't have much indicators for that. So that's the unknown for us. And the third part of the thing that will help earnings is, of course, interest rates. So just to remind everyone again, why they get so much interest is because of the collateral balances. So if you're a clearing member with the futures, you have to park money with the SGX in case you default, right? And you buy a lot of futures and then you don't pay up. So SGX will ask for a deposit, and I think the deposit now is maybe 4 billion or more. Or sorry, I don't have I think it's 40 billion, if I'm not mistaken. So that helps them earn interest, although they will return some of this interest to the clearing members, but there is additional spread that they make. And it used to be as high as 100 over million in, I think, 2018, 2019. SGX used to earn almost 100 over million from treasury income, which is a nicer word for basically interest income. Next slide. Nothing is just a historical valuation. So if you want to look at this chart, then the cheapest bank right now, at least on the price to book basis, is UOB, and it's below the average. Next slide. Okay, I'll move on to.
Thank you, Paul. I'll now be presenting on United Hampshire REIT. Next slide. So it is not rated, and its current share price is $0.435, with a market cap of 246 million. UHReit is Asia's first US grocery anchored shopping center and self-storage REIT. Its portfolio comprises 23 assets, of which 21 are grocery anchored and necessity-based retail properties, and 2 are modern climate-controlled self-storage facilities. So you can see the pie chart on the right shows a breakdown of the sectors in which its tenants operate in. Its properties are highly centered around providing the day-to-day needs of US citizens. And some examples of major tenants include ShopRite, Home Depot, and Walmart. The properties are primarily concentrated across 8 states in the US, focused on East Coast area. So the REIT has an asset under management of 738.7 million, and this represents a 26.4% increase since its IPO back in March 2020. So dividend yield is at 13.6%, trailing 12 months. So in terms of the first quarter performance for 2023, gross revenue grew 11.8% to 18.1 million year over year. Net property income grew 13.5% to 12.9 million year over year, and distributable income grew 7.6% to 8.8 million year over year. The strong performance for the quarter is backed by robust leasing momentum of its existing properties, along with continued positive contributions from Upland Square Shopping Center, which is its third and largest acquisition back in July 2022. In terms of capital management, the REIT has a weighted average debt maturity of 3.7 years and interest coverage ratio of 3.1 times. So back in December 2022, UHReit has actually completed the refinancing of its term loans that were scheduled to mature in 2023 and 2024. As such, they expect no major refinancing until November 2026, as shown on the graph on the right. And this essentially means limited exposure to potentially higher loan margins in the current volatile market environment. Gearing is at 42.6%, a little higher than peers, but is at a level that the management is comfortable with, and they have no further plans to increase it by taking on more debt. As at March 2023, 80.2% of the REIT's total loans are either fixed rate loans or floating rate loans that have been hedged. In terms of strategy, the management is also proactive in asset management as well as enhancement initiatives in order to maximize distributable income of the REIT. They recently announced the construction of a new building on their existing excess land, which will house a new store for Academy Sports and Outdoor, an American sporting goods chain store. Site work has already begun and they have already pre-leased to the chain store. The new store is expected to generate new revenue for the REIT as well as improve the overall foot traffic for the neighborhood. The management is also exploring the potential for another smaller size store next to Academy Sports and Outdoors and is currently looking for prospective tenants. Lastly, in terms of outlook, the management seems optimistic about their performance as the grocery and necessity retail sector continues to demonstrate resiliency. And this is driven by strong tenant demand for space, as well as the fact that majority of its tenants are essential businesses, which are not as vulnerable to cyclical shifts in the economy. Thank you, and I'll now be passing my time over to Sean, who will be presenting on Singapore's bond market.
Yep. Thank you, Joycelyn. So I'll touch briefly on the bonds volume for the new issuance in Singapore for the first half of this year. So year to date, there were 30 Singapore-denominated corporate bonds with the issue size greater than 100 million, which were being issued. So this brings the total amount that was raised from these bonds to approximately 9.2 billion. However, out of this 30 new issuance, 20 of them were issued in the first quarter of this year, while the remaining 10 were issued in the second quarter. So the slowdown for the new issuance in the second quarter was most probably affected by the banking turmoil, which happened during the March period, which have spooked the market, therefore causing the new issuances to shift to a lower gear. But I mean, despite us being in a high interest rate environment right now, there are still new issuances coming in, thus showing that the issuers still have the bandwidth to issue bonds in order to meet their funding requirements. So for those who may be looking towards a bond for an additional layer of diversity in their portfolio, our direction for the fixed income instrument will be looking towards investment grade bond new issuances with sound financial health. Because I mean, these new issuances are very likely to have capital appreciation opportunities once the rate starts to taper off. Because currently, I think the coupon rate for this current new issuances are priced at a relatively competitive rate due to the high interest rates. So on the next slide, this would just be a chart to show on the correlationship between the Fed fund rate and our government securities. So on this chart, you're able to see that when the interest rate in the US move in a certain direction, although not entirely the same magnitude, but the Singapore's government securities also tend to move in tandem. Hence, for those who are looking to park their funds into relatively safe asset class with a duration of perhaps 6 to 12 months time, then our government securities such as our 6-month treasury bills are also offering quite an attractive rate at roughly 3.89% in the last window. So with that, I'd like to hand over the time to Zain to share on his technical portion. Thank you.
Thanks, Sean. I'll now move on to the technicals. Start off S&P 500. So S&P, we did a successful retest of the 4,300 resistance level breakout as shown in the chart. So we bounced on from there and we had a nice closing on Friday that was above the recent swing high at 4,450. So if it is possible, we see continuation of the bullish momentum this week, where we could test a 4,500 level next. For S&P 500, the immediate resistance lies at 4,450 to 4,520. As for the immediate support is around 4,330 to about 4,380. Next slide. So with the conclusion of the first half of the year, the S&P has delivered a very good return of over 15%. And we looked at the historical returns in the last 10 instances since 1989, when first half return was more than 10%. And in the table, it actually shows that the second half return as well as the annual return in these 10 years were actually very positive. Next slide. So the S&P 500, when the first half of the year has delivered over 10%, it has continued to deliver positive returns in the second half. Also, the average first half return was about 14 to about 15%, but the second half provided slightly lower average returns of about 11%. And the second half tends to perform the first half in about 8 of the last 10 times, as shown in the data. In conclusion, the investors should remain invested as the market tends to generate very healthy annual returns of over 27% in the last 10 instances when the first half actually crossed over 10% in terms of the returns. Next slide. For individual stocks, the first one will be Sophie Technologies. So for this one will be a technical buy at $8. We take profit levels at $10 and $13.50. And a stop loss at $7. The stop loss closed at $8.34 on Friday. So for Sophie, it's a positive retest of the inverse head and shoulders breakout last week. And as long as we continue to find support at around the $8 level, we could go on to test the first resistance level back at $10, which is the recent swing high, then followed by about $13.50, which was the swing high generated in February last year. Next slide. So next one is ISDN Holdings. So initially, when the report was released, it was a nice retest of the 50 cents to about 50.5 cents previous resistance turn support. However, this trade was actually invalidated the day after report was released, as the opening price of the next day actually was much below the support level. So this recommendation can no longer be relied upon. So that's all from me. Now pass the time back to Paul to talk about Singapore property.
Yeah, thanks. Thanks, Zane. So regretfully for the next few slides, all going to be me because the analyst that wrote this report is on MC. So this is just an update on our visit to Lentor Hills Residence launch. This is a pre-launch. So this project is 50% by Hong Leong and then Guoco Land and TID Residential. So just to give you some highlights of this particular project, the first one is, this is the second project Guoco Land is launching in the Lentor Hills area. So their first project was Lentor Modern on top of the Lentor MRT station. And I think that was almost completely, that was like 80% plus sold over a launch weekend, and obviously I think now it's fully sold. So this is nearby. So this is Lentor Hill Residence, is like 2-minute walk. Then the selling price is starting about 1,008 compared to Lentor Modern. So the highlights for us is the last bullet point. Sorry to jump around. The last bullet point was that this is actually quite a critical month for launches, and this month is going to be critical because you really get to see the real demand out there. The reason why we say that is because there are four launches being bunched up this month at the minimum. Because there's, at the same time as Lentor Hills Residence, there's a Mist by CDL, then Lake Gardens Bing Tai, and also Pine Tree Hill by UOL. The reason why so bunching, because last month June is usually a school holiday, so developers won't launch. Then May, because it's school exams, I'm not sure why, but they typically also don't launch. But apparently, so this month there is a huge bunching of, and this will really, you can really see the real demand out there because there's so many launches compared to usual 1 to 2 launch per month. So this one will be the real test this month to see the response. Next slide. So the other highlight is that what potential supply, what it means is that because I think there are 7 parcels of land being launched in the Lentor Hill estate area. And why it's so popular there is because number one, there's the Lentor MRT. Sorry, Lentor is around the Ang Mo Kio, Yio Chu Kang area. And they said that they are hoping to get demand from upgraders in the northeast and also the north. One of the attractions is there's going to be a park there. I think it's Lentor Park. Yeah, I'll probably get the Hilltop Park or something. Sorry, maybe get the name wrong. But there's a large greenery. There's a park coming up, and there's also a lot of private residents. I mean, yeah. And there's also okay, and there is another pipeline that the Gorko Land, the third project they're taking on is basically the Lentor Gardens land parcel in April. So if this launch does well, then of course it should have a good momentum for their next project, Lentor Gardens. Yeah, and we tried to ask them how is the response, but they didn't. I mean, it was pre-launch, so they couldn't really give us an idea how was the response, which is the main value add for all of us, but it was just too premature for them to give an answer. Yeah, I think with that we can just move on to the next slide. This is just a visit note. Yeah. So the other report that we issued was our usual third quarter strategy. The more details will be when we have our presentation on the 17th, I think 17th of July on a Saturday. Yeah, thanks. So the title of our report is Slower for Longer. So what we're just trying to say is that the interest rates higher for longer. What we mean is also we are kind of bearish because we think global growth will be slower for longer too. Next slide. So just a refresh on what happened. So banks continue to be sluggish, even though they reported record results. Unlike SIA reported record results and the share price went up 25% for the quarter. But for the banks, record results didn't really matter. I think what we think is happening for the banks at least is that the price action. So I think investors are just number one, they already kind of priced that in, and number two, we also think maybe there's worry whether the net interest margins can sustain. So that's why the banks have been very sluggish this quarter. Then on the right is the utilities have done well. Of course, SIA is a great way to fly now. And surprising, even Yang Zhejiang also did really well for the quarter, especially for the last 1 month. The REITs returned some of the gains. Mainly, a lot of it was affected by capital raising. I think Mapletree long raise capital did a placement. Ascenders did a placement. So the share prices were doing well until they started to raise capital. The bottom right, those stocks that didn't do well for this second quarter performance, Venture was down, partly because of the whole outlook for electronics. Then Genting Singapore is down. I think because the earnings disappointed. Venture is probably the only electronic stock we have in the index. Next slide. So for some of the macro things that we're looking at, because the one thing is that there's very limited progress in inflation. Next slide. So what although we see headline inflation is up, but the problem right now is core inflation, which all the central banks monitor when they set their monetary policy. So apart from China, where the red line, the inflation is coming down, most of the countries is still rising, like Japan and of course even the UK. The EU is starting to drop a little bit, but even then, I think they are still raising rates, and of course, the US also is looking to raise rates. So the worry we have is that this stubborn core inflation means interest rates are going to stay higher for longer. And one of the reasons core inflation is very dependent on not goods or even commodities. It's very dependent on services and dependent on wages. Next slide. So what we wanted to highlight in the report is that the vibrant labor market is going to keep services sticky. So you can see that the unemployment rate are all near record lows, or even for the EU, is also, although 7% isn't like a remarkable number, but it is still trending lower and it's at record lows. So this low unemployment is just going to keep services industry sticky. What we see there is that in services, the biggest cost input is labor. So with that high, then it's going to keep hard to arrest core inflation down, which we thought actually would be coming down sharper than expected. Next slide. And the theme that what we are discussing right now, we have why we have this funny chart labor dispute is what we're trying to say is that if number one, when inflation is high, this is a bit more technical. This like economists talking about. Anyway, when when inflation is high, employees will want higher pay to compensate. Tell me about it, right? To compensate for the loss in real income. But the bigger problem you have is that if inflation continues to stay elevated, then they will demand higher wages in future. Then you get this negative spiral or negative loop or doom loop, whatever. So what we're seeing is really like in the UK, if you look at the amount of labor disputes they have, like for this chart, it's like a record high. It's almost like 600 disputes as of April 2023. So when you have this, then workers will ask for higher wages, then inflation will keep on rising, then this will keep on spiraling upwards until you have a big shock to the economy. Again, this is just a theme that we are looking at. Next slide. Then all our indicators also shows that growth continues to slow. Next slide. Of course, we are focused a lot on the US because US dictate global monetary policy. So consumer spending in the US is slipping, excluding motor vehicles. Motor vehicle sales in the US is doing very well because last year it contracted a lot. Of course, if you add motor vehicles, you'll do well, but usually we take out motor vehicles, MV, so that you remove the volatility in retail sales. So you can see here is down, it's sliding quite sharply. Next slide. The other thing we look at is corporate spending. So corporate spending is also sliding down. So these are new orders for durable goods, excluding military. This is so that we want to take the commercial part of durable goods spending in the US corporates. Next slide. And of course, loans is also contracting. I guess it's also similar in Singapore, especially in the US with bank failures. We see a significant sharp contraction in US loans growth. Next slide. Again, and I mean not to be such a bearish person about it, but the other thing that's contracting is also Asian exports. I think we always show this. Any Korean and Taiwan exports is also down, like the 7 to 8 months of slippage. Next slide. Okay, then in terms of the changes we made on the model portfolio, what was the big drag for us? If you look at the box, has been the property stocks. So capital land investments was down almost 9% for the quarter. I think mainly over disappointment in the recovery in China. CDL also down because, of course, somebody decided to impose property cooling measures, so that also hurt. Then we included Thai Bev and we took out DBS. Again, we still like the banks because we think dividends can grow, but we worry about the price action. Even though DBS announced that they're going to raise dividends for the next 2-3 years, the share price still came down. So we're just very concerned the price action for the banks. We still have OCBC mainly because OCBC's yield is almost about 5.5, and we think it can probably go to 6%. The big difference is that OCBC announced higher ordinary dividends, whereas DBS initially announced special dividends, which in a way has limited value to the share price because it would just adjust. Next slide. Yeah, just downwards after X. So this is the illustration of the performance, just for reference. Yeah. So we were hurt because property in China derated. Next slide. So in conclusion, I think for us, we think the sticky inflation will only drag growth slower, because if inflation cannot come down, then the rates will just keep on higher, and it will only progressively worsen the economic conditions because interest rates are high. The sweet spots we have, maybe not everyone will agree, is that hospitality we think is still the better area, and also China, although it will be helpful if they start announcing a stimulus. Singapore economy is still in stable shape, and we have a very defensive posture to the market. So we are looking at dividends just to shelter out. Next slide. Sorry, just one last one. Just please bear with us. I'll keep on talking. But so as we'll go through the usual Singapore weekly. So for some of the key macro events, we had RevPAR, which is for those who may not know, but RevPAR basically means it's the revenue per available room. So it's basically the hotel occupancy times room rates. So room rates in Singapore is like 270 on average, but if you adjust for occupancy, it's about 216. This is basically the revenue. You can use it as a proxy to hotel revenues. So for me, it's still up 33%, following from like a 50% jump in April, and it's still 28% above pre-pandemic. When we spoke to some of the hospitality REITs, they also mentioned that with the upcoming concerts, you can think of concerts as significant as a F1 event. So especially like Taylor Swift, you have 7 nights. If you accumulate the number of participants, is almost equivalent to like a F1 event. So they are of course very excited with so many events and concerts happening in Singapore. That will also help the whole hospitality industry in Singapore. But not so good news for manufacturing activity in Singapore. So our industrial production is down 12%, electronics is down 25% year on year. It's probably on the 8th month of contraction. Usual contraction is almost 14 to 18 months. In China, the numbers is also slipping a little bit. Services is down and manufacturing a bit higher. I think the biggest worry for us for China is mainly the exchange rate. So if you look at the Sing dollar to Chinese RMB, I think it's like more than a 20-year low. I think you probably had like 1998, the last time you traded this level. So, but I don't have the exact number, but it's definitely higher, more than a 20-year low. So the worry is only the RMB exchange rate continues to weaken quite significantly. Just a reminder that ECB is also raising rates. So Lagarde said that they will hike again in July. You can't get more explicit than that, that they're going to hike in July. Powell also, both of them were in the committee. If you have time, you should watch it in YouTube. But and also Powell also hinted very strongly that in July he's going to raise rates again. So what he said, just for your info, is it's not restrictive enough, or restrictive for long enough. I mean, it's pretty obvious, and they wouldn't take consecutive meetings off the table. There was another core inflation reading in May, but it continues to be just slightly lower than April. Next slide. So usually we will give a weekly strategy update. We normally post it in our morning note and also in our P3 community. So for this week, I mean, there's not much of a strategy, but just to give a review of what happened in the first half. So in for the first half, the Singapore market is down 1.4%, but at the same time, there have been some very stellar performance. I think Sembcorp Industries is a notable one, and of course Capital Corp. Some of the reasons is of course asset sales, but the other thing that's happening in Singapore, most may know, but just to remind everyone, is that especially for us that have a higher electricity bill, is because electricity capacity in Singapore is actually declining. Even though the demand has increased. So capacity, that means the power capacity, that means the generation electricity is actually down 18% to 11 gigawatts. You can get, these are like minister comments. And the problem is that this is unchanged. So you won't expect any increase in power capacity until 2025. So these very tight electricity conditions might persist until 2025, I mean, because it's unchanged, right? But the problem is that demand actually grew very strongly the last 2 years, 3%. It is significant. I mean, in Singapore, hardly electricity grew, but to go 3% is quite strong. Then, so we think that, and also the average electricity price in Singapore is actually trending up to 3.7 for the USEP price, and versus a year ago was 2.97. So why we're talking about this is because Sembcorp and Capital Corp, they benefit when spot prices are up. Although I think you can get more details from Peggy. Although 80% of it is contracted out, but they benefit when there's a big spike in power prices. So we think even the second quarter, they should also announce a strong performance. But the stellar performance were the conglomerates in the first half of Singapore. Then if we just take the next step and to look at globally, what were the equity markets that did well? Of course, the main one has been the Nasdaq Composite. It's up 32% in the first half. We took a look at the performance, like why was it because Nasdaq performed well because earnings, everyone raised earnings, but actually no, earnings expectations for Nasdaq was actually cut for 2023. But what happened was their PE expanded. I mean, from 27 times to 38 times. I mean, yeah, obviously, some of the reasons include AI, but I mean, more details you can ask John from our US research team. Some of the reasons also, the people were optimistic because they were cutting headcount. And of course, there's this AI, the team behind the artificial AI structural team. Then when we look at Singapore, I mean, which is regretfully and unfortunately for us, we were down 1.4. Even though our earnings was revised upwards by 14%, that means the market all raised their earnings expectations. Our PE actually cut from 12 times to 10.5 times. So people were becoming less bullish for Singapore, even though earnings was up. And their next big performer is Japan. Again, we also looked at what happened, but for Japan, actually earnings did very well. The earnings revision spiked up 40%, even though this is in US dollar terms. So in yen terms, it must be some astronomical, probably 50%. I'm not a Japan expert, but partly reopening, one of the reasons probably reopening, but apart from that, not particularly clear. So and just to move on to the last two parts, for events, we'll be having so these are some of the events coming up for the main macro events. The big one will be on Friday, where we will have the US payroll numbers, but we still think payrolls is still going to be strong. One of the reasons why we think US jobs will still be strong is because if you look at the data, US payrolls, because of the pandemic, it collapsed a lot, but it only went back to pre-pandemic in the middle of last year. So as a result, I think the US corporates are still replenishing their labor, and a lot of this labor comes from non-economic sensitive sectors like education, government, and so on. There won't be many corporate webinars for us the next 1-2 weeks because it's a bit of a quiet period, so corporates don't want to do webinars. But on the 13th, you will have our US strategy, and sorry, on the 15th, you will have our usual Singapore strategy outlook, where we will present together with all the analysts on the 15th of July. And we have Oh My Home, those who are interested. Okay, which is a Singapore company that's listed on the NASDAQ. So this is just to show you the slide. This is just the industrial production in Singapore. It continues to slide downwards. The red line is electronics. So this is a sense of where manufacturing activity is heading in Singapore. The strong one is in revenue, RevPAR, which is the hotels, which is doing well. So this is like a reversal of fortunes. I know in the pandemic, you can see 2021, the chart on the left, manufacturing activity spiked up because everyone was buying a lot of goods. But now you can see the reverse. Now it's actually the hospitality that's doing very well. Next slide. Sorry, just a few more slides. Then this is just the core PCE, which is this is whenever the Fed says they want to have a 2% interest rate target. So this is this is what they're using, which is the red line. So when we take, as usual, what we do is we take the latest inflation rate and then we just extrapolate month on month. You can see that the trend line is still 4.2. The summary of economic projections by the Fed is 3.2. So the Fed is forecasting 3.2. But based on the trend line by December, it's only going to be 4.2, and the target is 2. So the problem is inflation is just still too high, and still very difficult to bring it down close to their targets. So that's why I think they're raising rates one more time in July. Next slide. Usually we will just give an update where the market is expecting for interest rates, just for everyone's benefit, because you may not get access to this data. It's from Bloomberg. Sorry, not CIC, Bloomberg. So what we see is that the market is expecting at least one rate hike in July. I think the next meeting is 24th of July, 20 basis points. Then after that, the market is expecting no interest rate hikes anymore. The Fed expects interest rates to drop to 4.6%. Based on their dot plots, but the dot plots probably very unreliable. After more than 6 months, I think nobody really looks at their dot plots. Are usually not accurate. But anyway, market is pricing in one more hike. Next slide. Then this is just a review of the performance of our model portfolio. It was up about 2%, and it's still below the index by 2%. Next slide. Then this is just a review of all the sectors. Again, this is just for everyone's reference. I mean, what has performed for June. So what did well? The gainers for June was like Yang Zhejiang. So most of the gains that they achieved this year all came from this 1 month. Then Sembcorp and so forth. Then the top 10 losers is those. This is not exhaustive. This is not every stock the biggest loser. These are stocks that has the most volume, the most widely followed stocks. So we have a universe of 124 stocks. Then at the bottom is all the index stocks, the biggest gainers and losers for June. So the best performer has been transportation and conglomerate. Transportation because of SIA, and then shipping because you look at the table on the left. Then shipping because of Yang Zhejiang. Then conglomerate did well is because of Semcon Industries. Because these are market weight, so the large market cap stocks will dictate. Next slide. And this is just the performance of various asset class. This is my last slide. So how you read it is June, the best performer has been Nasdaq, followed by S&P, up 6%. For the year, the Nasdaq is up like 31.7%. The worst performance has been commodity ETFs, unlike last year where they did very well. Then again, Singapore is also one of the worst performers, down 2%. This is in US dollar terms. So in Sing dollar terms, it's down 1.4%. This is just for everyone's reference. Gold, for the month, gold was the worst performer, -2. This is just for everyone's understanding. Okay, thanks. I think we can move on to... sorry. This is my last one. Again, when you were mentioning like what drove the performance of Nasdaq. So how you read this chart is, if you look at Nasdaq, the expected, it was trading at 27 times PE. Then by June, end of this, in this 6 months, the PE expanded from 27 to 36. So this bullishness that people have over Nasdaq valuations, which is surprising because interest rates are actually even higher, but market continues to be very bullish on tech stocks. So it's up to 36 times PE, even though earnings was cut 2.4. So you see the line EPS. So EPS expectations was cut from 390 to 381. So this is one way to read it. Then for Singapore, our PE went down. People kind of derated Singapore, even though our earnings up. So although we raised, most of the market raised earnings by 13.8%, I guess either investors don't believe or don't think this can sustain. So that's why the market was down about 1.4. Then the standout one is Nikkei. Nikkei, the market raised the earnings expectations for Nikkei. So just one last one. So why we use this is just to get the understanding what is driving the performance of particular index. Usually it's either PE expansion or earnings growth. So this is one way we just try to do some performance attribution. Okay, thanks everyone. Yeah, thanks for yeah. I think we can move on to Q&A.
Let me take on the first question on CapitaLand India Trust. The question is CapitaLand India Trust rights issue at $1.06 good to subscribe? Also, what is the target price of Clink after this rights issue? Okay, the rights issue details is 119 shares for every 1,000 existing shares.
Sorry, we can't see your videos, right? I'm not sure. Maybe you got sorry to interrupt you.
Still cannot. Oh.
Never mind, it's okay. It's okay. Just go ahead. Sorry to interrupt.
Oh, okay. Sorry. So the announcement, the date that it traded last date to trade rights was 22nd of June. So if I use that price of $1.40, we arrive at the theoretical exit price of 1.1315. So you compare with today's price, 1.4 is just marginally better. That means if you are shareholders, you subscribe to this, you get a slight gain. And if you recall, early this year they issued 25 million new shares to their sponsor in connection with the acquisition. The acquisition that was announced, that was completed in June. They issued 25 million new shares to the CapitaLand Group at 1.0765. So it's also below the price that the sponsor had for their new shares. So that's another positive. The other reasons that the investors should subscribe to this is that it's different from the other issues so far we have seen. There was no private placements ahead of before this rights issue, so they just rely on this preferential offer to raise $150 million, and this proceeds goes to fund the acquisition that was approved by the shareholders last year, the Ascendus IT Park. The But okay, so but in the near term, there might be a slow uplift in the distribution per unit because of the IT park still has to fill capacity. It's a development project, and so the occupancy will start to the new tenants will only start to come in gradually, so there wouldn't be a sudden improvement in DPU just because it's not a mature asset. Okay. The clean gearing is 39% at the end of March. The cost of debt is 6.1%. So you can understand why they raise funds through capital markets. The yield for the clean is 7.2% based on last year's DPU. So it's very not much higher actually, I would say, compared to Singapore other industrial REITs which are holding Singapore assets. One risk for holding on to clean is that you are exposed to rupee, Indian rupee, and rupees a year on year has actually fallen 7.7% against the Sing dollar. Although for last 1 month it was up because of the very positive announcement about tech investments into India. But overall, we think it's still okay for existing shareholders to subscribe to the rights issue. Yeah. Thank you. I hope I have answered the question. There's another question on United Hampshire. Maybe I can take that one. Thanks for summary on United Hampshire REIT. What is the percentage of the properties that are freehold, in which properties are freehold? Okay, substantially all the properties are freehold. Only one is on the leasehold basis, and that accounts for about 3.7% of their net asset. So, yeah, okay, that's maybe I'll pass on to the rest sort out this Prime's question. Thank you.
Yeah, thanks. The retail corporate data does not seem to correspond with the increase in S&P. Why is that so? John, you want to take a stab at it? Yeah. Oh, okay, well, wait for let me take on this one.
Yeah.
How does higher John, you go ahead.
Yeah, thanks. So there's this question here. The retail corporate data does not seem to correspond with the increase in S&P 500. Why is that so? So I guess for the most part, retail data, or rather macro data, hasn't been that great. But what a lot of investors are looking at right now, I believe, are just your inflation rate, so your CPI or PCE, which has been trending down. The last reading was slightly below, rather slightly better than expectations, so it came down a little bit more than people expected. But at the same time, the job market remains really tight. The labor market, unemployment is still relatively low. It hasn't really seen a spike. And so I guess people are a little bit more confident that, maybe we might not be going into a recession of sorts. But also a big part of the growth or rather the big part of the returns in the S&P 500 for this year, like Paul mentioned just now, came from a lot of the AI hype. So so it came from companies like Nvidia and Apple and so on. So if you actually remove these companies, year-to-date growth is only about 4%, 5%. So it's not really telling the full picture. As you know, the overall market hasn't really done much per se. At the same time, earnings hasn't really grown. EPS for the S&P 500, for EPS expectations for this year is still relatively weak. So it is a little bit baffling that you see this divergence in terms of data and performance for the stock market. And we do also think that a lot of the one of the reasons is that people have the market actually expects rate cuts for this year, and that may not be the case if you're listening to the Fed properly. So we've got a lot of these factors as to why the market is actually performing better than people think it should. Yeah, hopefully that's I guess answers your question a little bit. To be honest, we're also quite surprised at how the markets perform, not just S&P 500 but also the Nasdaq. And a big reason is obviously AI hype that has been happening over the last couple of months. So yeah, hope that answers
Excluding
your
the
question.
Magnificent Seven, what's the performance?
For S&P 500 is 4%. For the Nasdaq, I believe it's about somewhere about 7 or 8%. Yeah, so it is driven largely by those 7 stocks actually. Okay, that's all. Hand it back to the rest of my colleagues. Thank you.
Okay, thanks, John. So let me just move on to the next one. How does higher interest rates better for SGX? Could you explain in detail? Yeah. So like we mentioned, so SGX has a collateral float. It's actually not 40. I made a mistake. Actually, 13 billion as of 2022. They don't publish this data every month. I think it's in the annual report. You can get it in the annual report. I'm not sure if they get it in every 6 months, but this is the float that they have with the clearing members. To explain the significance of this, so in FY20, SGX earned almost 140 million of treasury income, which is almost 30% of their earnings. In FY22, which is last year, they earned about 40 million because interest rate is so low. But in the first half, it already doubled to almost 40 million. So we think this year this could rise to about maybe 100 million this year. So, and with interest rates at record high, it should on paper exceed the previous high of 130 million. So this float is quite a big part of SGX, and I think it's also a big part of any future clearing member. So any companies that run a futures business also do get kind of a bit of income from interest income. I mean, if you ever look at the P&L of a futures company, so this float is like a like the so-called float, insurance float, whatever float. So this is another type of float, which is probably not so readily understood for exchanges. Yeah. Some of the slides are missing on the axis on time. But yeah, so sorry, I'm not sure which one, but yeah, apologies for that. Yeah, I need to check which one. Yeah. Okay, this one, the SGX and the recent announcement, we are not particular, but let me just read out the question. SGX derivatives tie up with Mumbai Stock Exchange. Could you outline the recent transaction and what do you think there will be impact? Yeah, sorry, this one, Glenn not around to announce, but it could, for us, I mean, on the surface, it looks like a positive because there was a threat that that they didn't want to allow the trading of Nifty 50, if you remember a few years ago. But to get the real details, you got give us some time. I think we are trying to check with SGX on the details. Yeah, on the previous arrangement, this current arrangement, and what is the benefit of this current arrangement? We will try to give the answer in we'll put the answer in the P3 community. So apologies for that because I don't really have a good answer for this. We need to double check with them. Because we have to ask SGX what's the impact what's the arrangement now versus the previous one, and also with the future, it should be better because if Nifty is going, if they are going to if the Indian exchange is going to announce more projects and in Singapore involved in it, then it will definitely be a positive because then you can launch, because right now you only have one product, which is the Nifty 50. Then in future, they could actually announce more types of products. Yeah, but let me just double check with SGX before we will post it in our community. Yeah. Apologies, I don't have the answer for that. Let me answer this before hand it over to maybe Peggy. Is the low China exchange rate favorable to China exports? What other implication to the economy as a whole, apart from China, please? Yeah. So we are a bit worried. I mean, if China is pursuing this low, because the currency is controlled in China, so we're just a bit worried if they are pursuing this policy to stimulate the economy, which is not the good thing. I mean, because to rely on the export sector, number one, which is already very weak. And the second thing is that ideally what the whole world needs is a stronger Chinese consumer, because China is one of the biggest exporter in the world with such a huge trade surplus, but they're not spending the money. So the implications is not good, because if they're not going to stimulate the Chinese economy, but if they're going to rely on this weak exchange rate, apart from that, really China just really needs a major stimulus for the domestic economy. Yeah. But it's not favorable. I mean, and it's not favorable for the whole exchange rate for the region, because usually when China exchange rate comes down, it will also pull down the exchange rate for the other Asian countries, not including Singapore. So it's not a positive. Okay, Peggy, you want to take on some if you really. Yeah.
Okay, I'll come back to the REITs later. I think I better confirm some numbers. There are some questions on SETS and SIA. Maybe I address those first. Okay. The question is, the market sold 1.8% of SIA shares, but we didn't see the announcement from XGX. Sometimes we see substantial shareholders announce the change in shareholdings, but sometimes we don't. What is the threshold or criteria for substantial shareholders to make such announcements via SGX? The rule has changed a number of years back to say that substantial shareholders, you only need to announce when you cross a percentage point. That means if you are from 55.5, you drop to 55.0, you don't need to announce. But if you 55.5, you drop to 54, then you need to announce. So you just drop the big number. So in this case, the market should be announcing quite soon. I think what Reuters reported was a term sheet that they saw that has been that they saw that says that the market is looking to sell at between 7.20 and 7.209 dollars per share. So that's the reason why we haven't seen the announcement yet. But I think we should see if after the deal has been done, they have to announce it within two business days. Thank you. Next question is, what are your views on SIA and SETS, fundamentally and technically? Zane will help with the technical part. SIA, we keep to our same argument. At current price, you get the 28 cents per share for dividend. So after that, within the 12 months target price should be about $6.80. The returning of the flights by the other Asian airlines, and also even today we hear about a new budget airline starting to fly again. So all this new capacity, especially from Cathay Pacific, which is their closest competitor, and the China Airlines would lower the pressure, would lower the airfares and actually lower the load factors also for the passenger flights. So for that we think the yields might be coming under pressure. The yields and load factors are coming under pressure for SIA, and the cash flows will see a negative outflow this year because of the redemption of the MCBs, which has been done last week, and also they will pump in more capital into CapEx and more investments if the merger of the Vistara and Air India materialize. So all that with our 1.1 times price to book, we arrive at our $6.80 target price. For SETS, we charted a chart for the flights, passenger numbers, and the number of flights at the Changi Airport, which SETS accounts for 80 to 85% of the volume. It's actually the the 3-month moving average growth has been flattening off. It's now for last in May, the 3-month moving average is about 6.2% month-on-month growth. So it's not the double digit that we have seen in the last few months, and certainly not the triple digit that we saw last year. So the stabilizing off, and the other things to watch for sets is that this first quarter results that are coming out will also include the consolidation of WFS, consolidation of WFS debt, and also how they account for the goodwill and intangible assets which they have paid for WFS. So for accounting standards, intangible assets have to be amortized. So all that with the higher debt at WFS and will raise the interest expense for sets. So this first Q numbers, which is for quarter end June, might not look very exciting. Going down the road with the opening of China, they have exposure. China is as a market accounts for 10% of their revenue. So any China reopening is positive for sets. So they have a smaller. They have also an India exposure, and trying to raise the exposure in India as well. So the reopening in China, India, China especially, and Hong Kong will help them a lot. So, but fundamental wise, we still keep to our target price. Thank you. The next one is, when is United Hampshire REIT paying out a dividend again? They will be they pay out every half yearly. So the next payment should be about August. I estimate, yeah. Thanks. Another question on sets again. Why sets is performing badly? Again, the same reason. We're watching, holding our breath on sets results, because not sure how big is the impact of WFS on the balance sheet. In EBITDA wise, they might contribute to sets EBITDA, but bottom line would be dampened by the higher interest cost and also potential amortization of intangible assets. And the WFS is a cargo player, has a substantial exposure in US and Europe, where the cargo numbers are falling. IATA numbers is indicated that these two regions, especially US, the decline in cargo is a double-digit decline in the first 5 months of this year. Recent overvaluation remarks on SIA caused shares to slide. Any comment as dividend dispute in August 2023? If you still holding on to shares now, or you buy now, you get this 28 cents dividend. But for coming years, we don't think they can pay this amount. Optimistically, they can probably only pay out about 20 cents going forward. So your dividend yield comes down to be not attractive. So we don't see a reason to hold on to SIA. Yeah. If I'm not answer your question, please come up with a follow-up question again. I'll address it.
I think in the meantime, Zain, I hand it over to you.
Okay, thanks, Pei. I'm just begin with the TA portion. Okay, so the first one is NetLink. Okay, for NetLink, I think currently the big picture wise, it looks like to be a possible consolidation over here. So there's this like triangular wedge that's taking place. Currently could be retesting the around 87.5 cents. This was a previous key support and key resistance form over here. So over here, there could be some resistance for timing, but should we see a breakout over here, then the next level that it could hit is probably maybe around 89.5 cents to about 90 cents, this area over here. Okay, next one is Agricultural Bank of China. Okay, Agricultural Bank of China currently, I think still in a bit of consolidation, but today looks like some decent volume coming in, as well as a possible breakout of this trend line resistance over here. So if it continues this momentum upwards, the first target it could possibly hit is around 318 over here, which is this swing high. Next target it could possibly be around 328 over here, which is this next swing high. So for now, it looks to be in a bit more bullish, range to bullish direction, since that it managed to form a higher low over here and in a consolidation mode for now. Okay, next one is Apple. Apple, as one look from a chart, you can tell it's very strong, still trading well inside the uptrend channel over here in this stretch. For now, could be possibly hitting a bit of a resistance around 195, which is this channel resistance over here. So still need more price action to confirm in the start of this week to see whether there's some resistance coming in. But overall, still very strong for Apple. And next one is LHN. Okay, LHN also looking quite good. Looks like a possible ascending triangle breakout taking place today, as price broke above the 37.5 cents resistance level today. So with that, there's also a short-term resistance to clear at around 38.5 cents over here. This was a previous swing high. If we do clear these two levels, the next resistance I think we could see is possibly from around 41 cents onwards to about 42.5 cents, which was the swing high in June 2021. But still, the momentum-wise still looking very good for LHN. Looks like possible continuation of the bullish momentum over here. There was an upward move and a consolidation phase, and there could be a continuation of the primary trend taking place. Okay, then next one is Prime US REIT. A Prime US REIT looks like a possible break of this downtrend resistance line today. So it's able to sustain. There could be some bounce coming in for Prime, but this still looks to be possibly bounded in this range over here. So I expect some resistance possibly around the 23 cents level to about 25 cents level, still acting as a short-term resistance for this week. Okay, the next one is Capital Pacific REIT. Okay, so for this, likely still in a range over here, but some signs looks like last week this 29.5 cents level it was able to hold. So short-term wise, it looks like a double bottom in place, and then we also broke above this 31.5 cents short-term resistance. So likely price could be heading upwards for now. We could be going on to test some resistance closer to about 33 cents to about 34 cents in the short term over here, which could test this resistance over here. But midterm wise, likely to still trade in a range for now. Okay, next one is Hong Kong Exchange. Okay, so for Hong Kong Exchange, the big picture wise is still trading in a downwards trend channel over here. And then short term wise, looks like we rejected off. There was some rejection of a previous support and resistance close to about $315, and price trending down for now. I think for now looks like still bearish, given that it looks like a bearish flag, range flag over here. So looks like price is actually consolidating in a range between 295 to about 303 for now. So if we see a break upwards, then likely price will test about 310 to about 318. But if you see a downwards break, then there will be a continuation of the current bearish momentum. Then we could possibly go and test 285, which is this swing low in end May this year. Okay, next one will be TA on SIA and SETS. Okay, so for SIA, I think currently looks short-term, still in a short-term pullback. We actually broke this short-term swing low around 735. So currently looks to be a little bit of a dead cat bounce over here. Still below the 20-day moving average as well, which could become a short-term resistance around 736, which was this swing low that was being broken. Then short-term wise also to note there's possibly this trendline resistance acting on it around 740. So over in this area, I expect some resistance for now. And some key supports downwards, if you don't hold the recent lows, could be the next support zone could be around 690 over here. Okay, then for sets. For sets, I think currently still bearish, lower lows being made, but for now, price looks to be trying to stabilize maybe in a range for now. Yeah. So no new lows have been made recently. So for now, could be a little bit of a consolidation taking place between 255 to about 265, this 10-cent range over here. Okay, then some of the other Hong Kong counters. Okay, 3032 Hang Seng Investment Management Tech ETF. For this, I think currently, midterm wise is still acting in the range over here, price, but short term wise, we could see a little bit of a rebound taking place. And that we actually crossed this recent swing high around 395, 396 recently. So next resistance level, short-term resistance level could be looking at maybe around 415 to about 423 over here. And then next up is 10-cent holdings. 10-cent holdings, currently price looks to be basing out a little bit from the recent downwards, recent pullback over here. So looks like found some support from this swing low around 330. Could be doing a little bit of a bounce if this holds. Short-term resistance could be around 345 to about 350 over here. And next one is JD.com. JD.com, a little bit harder to interpret this stock as previously was trending pretty okay from here. Then when it trended down, it just cut through all the support levels on the way down. So currently looks like still in a downtrend for now, unless we manage to clear this recent swing high around 140.8 over here. Yep. So for now, I think could be some resistance along the way from 141 to 143 in the short term. And then support wise, I think current support is around 131, 132, this swing low. If it's able to hold, if it can't hold, then likely we go on to test this swing lows from around 122 to about 126 over here. Still in a downtrend over here, still lower lows and lower highs. Next one is Ping An Insurance. Okay, for Ping An, currently price supported around 48 over here, this swing low. So for now, doing a little bit of bounce. Today also broke through the high of these recent few candles over here, around 50, and retested the recent swing low that broke down off at 51. So could be some resistance acting from 51 to 53 still for Ping An. So I think price might be still kept in the range part for here, maybe doing a bit of consolidation. Okay, then next one is DBS, the three local banks wise. DBS, good thing is that the previous resistance over here around 31.20, 31.30 that I mentioned last week is still holding as a support over here. So that's a good sign. Resistance is still acting from around 31.80 to about 32 over here. So I think for now, still a little bit of a range pattern over here, but starting to form higher lows. So let's see how it goes. If you manage to see whether it managed to break above this key resistance level for higher highs to be formed. If not, currently still range mode for now. Okay, then looking at UOB wise, nothing much has happened. So still very much in a range. Yeah, last Wednesday we tested this trendline support around 2760. Then also these recent swing lows at 2770 found support and we did a little bit of a bounce. So very much still in the range over here. So I would think that continue to find resistance in the short term around 28.10 onwards to about 28.40. And for OCBC still looking a little bit, we're still unable to recover above this 1240 this level that we broke down off. But for now looks like we are holding this swing low around 1225. So for now, if this holds, let's see whether we're able to do a bit of a retest of this level. For now will be the short-term resistance. If we can't make lower lows, likely we go and test this lower range support around 1210 over here again. So for now, in terms of the three local banks, the one that's looking the best right now, I would say is DBS, since it's trying to trade higher and the support is actually holding. Okay, then next one is Thai Beverage. Okay, for Thai Bev, I think currently we're still kept in the range for now. Resistance is still acting at 59 cents for now, which was there was a retest on last Friday of the recent swing highs. For now, I think the key will be looking to see whether this swing low at 56 cents is able to hold. So if it's able to hold, likely we are still kept in the range. If it doesn't, then likely we go on to test 54 cents again. Yeah. Okay, next one, SIA Engineering. Okay, SIA Engineering, I think currently we could be trading in an uptrend channel for now. Higher highs and higher lows being formed. So for now, current resistance could be at around 252, which is these two recent swing highs. But if you do manage to break, the next resistance could be around 255, based on this channel resistance over here. And then for Singtel, I think we could be a little bit of a consolidation for now. The good thing is that recently after 244, this swing low was supported after multiple tests. We have been forming higher lows. So there was around 247 and around 249, 250 over here. But price is still resisted by this downtrend resistance line over here. So with lower highs and higher lows looks to be in a consolidation triangle. So I will expect this week to actually continue consolidating before we find the new direction, whether it's upwards or downwards in the coming few days. And then Hourglass. Okay, Hourglass, I think we are still kept in this downtrend channel for now. We're still finding resistance at this previous support zone, which was around 202 to around 205, still acting as a resistance over here. So for now, price will maybe try to trade in a range towards a downwards trend over here. Yeah, recent support is around 197, as well as this swing low at 194. Next one, Hong Kong Land. In Hong Kong Land, I think it's still rather weak for now. For now, price could be trying to be in a range over here between around 390 to about 405. Yeah, but the key is to see whether this swing lows is able to hold, because this was like a previous resistance, a key level. It was a previous resistance as well as multiple supports last time. So if it's able to hold, we might be able to see Hong Kong Land trade in a range. But if it doesn't, we're likely to see continuation of downtrend, lower lows being made, and the next support will likely be at 378 over here. Okay, next one, Mapletree Logistics. Mapletree Logistics, currently testing the support around 161, still holding. So for now, looks to be a little bit of a trying to consolidate for now. Yeah, see whether we're able to break outwards to try and test the current resistance but likely to be around 167, 168 as the first level. And the next level of resistance likely be 171 onwards to about 174 over here. So in this stretch, you can see Mapletree Logistics still trading in the range for now. I think that will still hold for the time being. Okay, next one, TSM. Okay, TSM, I think currently short-term wise is a bit bearish because it broke down this uptrend support line, as well as currently trading below 20-day moving average. And see when it was also finding resistance upon retest of this MA last week. So for now, but the good thing is that price actually still didn't form a new lower lows recently. So looks a little bit of a sideways movement in a current bearish short-term trend. So we still need to see whether price is able to try and break upwards of this range around 103 to 105, which is current resistance zone. And if the support doesn't hold, we likely break 100. We're likely to see 97 as a next support level next. Yeah, so still more clues to be had for TSM. Okay, then Capital Corp. I think Capital Corp could be consolidating very short term wise, could be consolidating for now. The candles are actually very tight and volume actually decreasing, so likely to see some form of continued consolidation this week. But in terms of the uptrend wise, I think it's still intact given that there was a retest of this previous range breakout at 655 still holding over here. So still looking good for now in the mid-term to long term. I C07 Jardine CNC. Okay, Jardine CNC, I think we might be still kept in the range over here since last Friday we actually broke above this resistance at 34.50, but today there was no follow through and it was met with a rejection candle over here. So I think that could be still a sign of consolidation might still continue for now. But good thing is that we are forming higher lows recently, which is a sign of strength. So if you are to see a little bit of a pullback, I think we could see support around 33.70, which is this trendline support as well as this this short-term range support over here previously. Yeah, until then, I think it's still looking more towards the bullish side. It's just that might need more consolidation for now. Okay, next one is Alibaba Hong Kong. Okay, I think for Alibaba Hong Kong, currently in a downtrend stretch, for now, I think we still made lower lows over recently, so that's still quite bearish. And currently looks to be a retest of this level, this support that we broke down from around 83.40 over here. So likely to see maybe see some form of resistance in this range that we broke down from around 83 to about 86. Unless we manage to take out this swing high at 85.75 and make a new high, a higher high, then that could be a sign of a reversal. If not, I think we're still in a downtrend for Alibaba over here. Okay, next one is Seatrium. Okay, Seatrium, I think for now, we could be finding some support at 12.4 cents, 12.5 cents. So this is the this main uptrend channel support over here, as well as it was a key horizontal level to take note, as previously it was a resistance over here we broke out from, and currently we are doing a retest. So as long as we find support over here, I think we could see a little bit of a bounce in the short term. Resistance could be around 12.7 to about 12.8. as a first level of resistance, then from 13 cents to about 13.3 cents as the next resistance zone. But if this holding, I think we could expect a little bit of a bounce from Citrum in the short term. And then next one is Raffles Medical. Oh, Raffles Medical actually looking good. It looks like a breakout of this range pattern over here from 130 to about 136, and then also a break of the downtrend resistance line over here. Yeah, short-term resistance, first level resistance could be around 139 over here, this recent swing highs. Then next level could be around from around 141, this 141 to about 143 over here, this range that we put down from previously. But looks like trying to form a trend reversal currently, as we are forming a higher low recently. Okay, the next one is AEM. Okay, AEM currently, I think we are trying to retest this channel resistance over here, this blue color channel resistance. So for now, around 387, we might see some resistance, given that this was also like a range, so a support level that we actually broke down off over here. So this like a retest from 387 to about 395. Could expect some resistance in the short term for now. Then support will likely be around 373. Previous resistance, horizontal resistance level, currently looks to, we actually managed to break above this level. So I think upon retest, this will likely still hold as a short-term support. Okay, P34 Delphi. For Delphi, I think currently we're still very much range bound. Price tried to break above this resistance around 133, 134, but still met with selling the next day. So no positive follow through. We could be trying to test maybe the support over here, 124 over here again. So still very much in a range mode for Delphi for now. Okay, next one is UOL. Okay, UOL currently we could be seeing a little bit of a bounce. The retest of the two key supports around 635 is finding support. So this was retest of the swing low was supported, and then also this trend line support over here as well. So for now, price actually doing a little bit of bounce. I think we expect some short-term resistance around 665. Key horizontal level, given that it was a previous support, broken down as a short-term resistance over here. Okay, then the next one is Genting Singapore. Genting Singapore, short-term wise, I think could be trying to trend up a little bit. So recently we had a double bottom over here around 93 cents. Price was supported. There was a bullish candle coming in, and price started to trade upwards. And possible breakout of this short-term downtrend resistance line today. So if price actually continues its recent momentum, I think we could go on to test some short-term resistance from around 97 cents to 98 cents, which was the recent swing highs. So in terms of the MACD, something I spotted was that price, while making this double bottom, MACD was making a higher low. And then we saw that the positive crossover was actually supported. So with that, there's a chance that we could see a little bit of a bounce over here if the price actually supported at around 94 cents this week. Okay, then next one, Broadcom. I think Broadcom currently could be doing a little bit of a consolidation. Short-term resistance likely to be these swing highs around 883. But the good thing is that we are forming higher lows along the way. So maybe we could see some form of maybe ascending triangle or kind of a consolidation pattern for now. Yeah. So I think we likely still see resistance upon retest of this swing high, but I think we could see higher lows are coming in for Broadcom. Next one is Hong Leong Finance. Okay, Hong Leong Finance, I think still trending well. Overall range, then the uptrend, still in an uptrend over here. Could possibly be in an uptrend channel over here. So for now, short-term resistance could be this recent swing high from 255 to maybe this swing high around 259, this area. And support will likely be this this horizontal resistance breakout, and there was a positive retest over here around 250. Yeah, so for now, maybe price would maybe trade in a range in this channel over here. Okay, the next one will be capital land investment. So I think capital land investment for now is it managed to survive this test of 324, this swing low over here, and price rebounded, and along the way MACD higher low, still maintaining a positive crossover. So the chart wise is a little bit like Genting, similar to that. So for now, I think price could continue its bounce to maybe try 340 again to maybe 347, this swing high over here. Okay, next one, Aztec. Then Aztec. Aztec forming higher lows around the way, then short-term wise could test this resistance at 73 cents. Yeah, so then we could be seeing maybe an uptrend channel in place. If you break 73 cents, maybe 74.5 cents next for Aztec. Okay, then next one, China Aviation. China Aviation, I think still consolidating over here since pulling back from the resistance at 99 cents. So price recently no new lower lows have been formed. So basing out a little bit for consolidation, expect support from 92.5 cents to 93.5 cents to hold, I think. And next one will be First Resources. Okay, First Resources, I think still bearish, lower lows being formed, but some support could come in around close to the current price. Sorry, the current low of 136 over here, which is this trendline support over here. So if this holds, maybe price could try to do rebound. We see a break of this 143 resistance, then maybe we can go on to test 146 to about 148, this previous support, now turn resistance. Okay, Capital DC REIT. Capital DC actually it was looking bullish recently. So it managed to enter back this uptrend channel, and then managed to break this this resistance at 211 and trending higher for now. So I will expect the momentum to continue, maybe try and go on to test the resistance from around 218 to about 224 over here. Maybe try and do a double top for now. But still looking good since this bullish candle came in last Wednesday. Okay, then for digital core REIT. Digital core REIT, I think still maybe in a consolidation, this triangular pattern over here for now. So let's see whether it managed to break upwards or it's a breakdown. If it break upwards, short-term resistance 49.5 cents. Next resistance to look at will be around 53 cents. But if we break downwards, the next support level likely to be at around 44 cents over here. Okay, I see a question on Capital Land Commercial Trust as well. For Capital Land Commercial Trust, I will expect a little bit of a bounce taking place since the price actually looks to be supported at this trendline support over here around 190, 191. So for now, short-term resistance will be this 193 support that was being broken, then followed by 197 will be the next short-term resistance level. Okay, there's a question earlier, your ISDN forecast does not apply, means sell or buy. Previously, the report was a technical buy at 58, at the 50.5 cents level. So here, if based on this closing candle, it was a buy because it was a successful retest, but it cannot be relied upon the next day because the opening price actually broke through this support already. So this the bullish thesis over here does not hold anymore. So just to clarify, I think that's all the TE questions for now. I'll hand over the time back to my rest of my colleagues. Yeah, thanks.
Thanks. Thanks. We'll try our best to clear as many questions as we can. There's a prime one. Okay, so we answered the exchange rate. Okay. Hi, Paul Miao. Many thanks for the excellent Lentor overview. Mainly her, not me. But what are your views fundamentally on Guoco Land? On a separate note, your thoughts on the potential making similar node visits to Mist and Pine Tree. Yeah. Okay. Thanks for the suggestion. So we will try to make some visits to Mist and Pine Tree. This was different. This node we did was because the company invited us, so that's why. So we want to go there, and then hopefully the company can be there to at least present and give us some of the details that we want. So we will try our best to do that. Our views on Guoco is actually is quite favorable in the sense that they are building quite a large stream of investment properties. I don't have the details, but because of the recent they have built up quite a nice revenue stream from recurrent income, especially from the whole redevelopment of Beach Road. We will be making another visit with them on Beach Road property, so we probably try to give a note on that. But they seem to be performing well because they are changing the model to more recurrent income. I don't have the details with me right now. Yeah. Why is the Healthway below offer price? I have no idea though. So Healthway, just for the benefit of everyone, there was a general offer by OUE for Healthway at, I think 4.8 cents, if I'm not mistaken. The share price is at 4.54 and 6. I can only guess, like 99% guesswork. Maybe people are just a bit more nervous now whether you can actually complete an acquisition, because I think the SGX also came out with a note only a few hours ago that make it a bit more stringent. So when there's a exit offer or general offer, there is a IFA or independent financial advisor that is appointed. Usually, all these IFAs will just say it is not fair. That means it's undervalued but reasonable because there's no liquidity, so it's reasonable that you take this offer. So they will ask shareholders to accept the offer. But the SGX seem to be tightening this rule whereby if you can't just say fair, it seems to be tightening this not fair, but reasonable. That means it is very cheap to offer, but then because no liquidity, you're stuck with it. So in a nutshell, that's how the IFA concludes. But they seem to have changed the view that you cannot say this, or the requirements to say this seems to have tightened. So this is based on my reading. I'm not sure if that's correct, but that could be one reason why the offer might be below. Apart from that, I'm not sure. Maybe someone else has the answer, but there might be some nervousness whether this exit offer can go through. So maybe some investors just want to get out, sell just in case the offer doesn't go through. Because the thing it was so fun. You're basically telling the minority, oh, this offer price is too cheap, but what to do? Liquidity poor, so you have to take it. But maybe they tighten that. Why do you think of Thai Bev and Thailand in general? So for Thai Bev, we like it mainly because they still have a very strong market share, about 90%. We think rebound is underway, although it might be a bit softer. And for Thailand, what we like is that post-election, all the new parties actually have a very pro-labor policy. In a way, even Singapore has it. So they're trying to raise minimum wage, trying to give more farm subsidies. So all this will benefit the consumer. It didn't benefit the last 1-2 years because inflation is so high, exchange rate. So actually, regional consumer looks quite positive, because if you look at wage growth, actually wage growth is starting to creep back up very strongly for a lot of these emerging markets. And of course, Thailand will recover with tourism. And the first place most of the China tourists, they come to Asia, especially Southeast Asia, is Thailand. So, and the numbers for Thailand tourism rebound strongly. So we think that's why we are favorable. And the valuations for Thai Bev is now, I think, about 10-11 times. I think it's like more than a 10-year low in valuations. So these are some of the reasons. Yeah. But if you want to talk about a consumer stock on the index that has a better, longer longevity, is of course Emperador, because they're selling high-end whiskey and so forth. But it's just that in the near term, we think there's a tactical opportunity for at least Thai Bev. Yeah, our target price, I think, is 80 cents. So it's just we think the selling is a bit overdone because of this anti-monopoly worries. Let me take the rest before I hand it over to maybe Peggy. Private share placement is not good for retail investment because of dilution. Why do companies such as Mapletree continue to do this? Related question is, hi Paul, why is this Ascendas REIT not non-stop getting additional funds by placing out shares as compared to others like Mapletree Industrial? Is it due to gearing that's very toppish? Darren is not here, he's our REIT analyst, but every CEO for REIT, when they wake up in the morning, the one thing they want to do is raise money, because it benefits them. Because always remember, the trustee is paid from not only just the growth in DPU, but they also paid for the size of assets under management. So the usual thing, you ask a barber whether they need a haircut. It's the same thing if you ask a CEO of a REIT, should he raise funds? Of course, they want to raise funds. They raise funds, then the trustee manager can actually grow the income. So it's like asking every broker, should I be trading? You will probably get the same answer. So they will always want to raise funds. It's just whether is it DPU accretive? Of course, they always claim there's DPU accretive, but there's a lot of details have to be checked on whenever they say that. But just to give an answer, all funds want to raise money. That's almost in the DNA that they have to raise. They want to grow big because they grow by getting bigger. You get more funds, more fees, and of course by getting bigger, you get to attract the larger funds too. I mean, to provide credit. And once you're in the index, whichever index, when you raise funds placement, you get a lot of the arbitrages to come in, because once you raise funds, your weightage in the index will increase. So a lot of the arbitrage funds also, or prop desks also, want to get a hold of the shares. They also participate in this because they know after they take the placement, usually the index funds also have to come and buy, because the index funds to equalize the weight, right? Let's say Ascendas did a placement and their weightage in the index maybe jump maybe 1%, just for argument's sake. Then they know the index funds have to come in to buy too. So a lot of the arbitragers try to get hold of these shares and then sell it back to the index funds. This is one of the reasons being in the index, normally your placement will have a better take-up rate. Sorry, it's a bit more technical, but this is one of the reasons too. Let me answer this before I hand it over to the rest. Paul, do you think dividend payment can be maintained and sustainable for PropNext and UHReit going forward into a more challenging time? Yeah, we think, okay, so for PropNext, they have 140 million of net cash in the balance sheet. Their dividends, they pay is about 50 million. UHReit net cash is about 300 million. The dividends they pay, I think 40-50 million. So both definitely can afford to pay. It's more whether they wish to pay, because their operating cash flow can still pay the dividends, and they got enough buffer, like 150 to 300 million. PropNext definitely clearly state that they want to become a dividend yielding stock. So they always try to pay enough to. Right now the dividend yield is 7, so they always try to pay attractive dividends. So historically, although they never mention, maybe they always want to maintain like at least a 5 to 7% dividend yield. So they tend to look at dividend yield to determine how much to pay, because they got a lot of cash. UHReit is a bit more difficult because some of them, the money they pay out is in share buyback. But again, both companies we think want to pay, but just that it's just the management willingness and how they want to return capital. Is it share buyback or is it by dividends? But affordability is not an issue for them because they have such an incredible amount of cash. I'll take this last time I hand it to Peggy. Which SGX listed counter has the most exposure to the AI wave? Okay, I mean, regretfully for Singapore, we don't have any pure AI because none of the tech stock on the list here, but indirectly, it will be the semiconductor companies, and it has to be semiconductor that is on the front end. That means they make equipment to make wafers. And ultimately, the main producer of all this is, of course, NVIDIA, which uses TSMC most of the time. Maybe recently they are changing it a bit because, but it's still going to be a TSMC. So when we say AI, just to make it clear, we are talking about AI chips, semiconductor chips that is used in the cloud. So when you use ChatGPT or generative AI, usually the processing is done in the cloud. That means the data center. We're not talking about AI in the handphone or the one that is AI when you take photo, try to adjust. So we're not talking about that. That's not generative. So if you're talking about generative AI, it's mainly the AI chips, which is mainly NVIDIA chips that's in the cloud, in the data center. So so just to get you to understand the flow. So NVIDIA will make these chips. I mean, normally it's like the hyperscalers will buy from them, or even corporates that want to have AI. So these chips will then, NVIDIA will outsource to TSMC. But these are the very high-end chips. This is probably the 5 nanometer or whatsoever. So the companies that make these equipment, sorry to complicate this, is like the UMS, Franken, maybe, and also AEM to a certain extent, because AEM a bit more on the Intel side. But basically, these are the 3 names that will do. But even they won't know because of whether they are working on NVIDIA. So this equipment, so let's say UMS, AEM and Franken make semiconductor equipment that may be used by TSMC, but this equipment may or may not be used when producing NVIDIA chips. So nobody really knows. But if you want to get the most exposed will be these 3 names. Yeah, that's a very long answer. But Peggy, hand over to you if you have any.
Okay, thanks, Paul. Okay, I answer the question. Hi, please comment on Prime versus Keppel Pacific REITs, dividend yield, target price, percentage of fixed loans. When does Prime ex dividend? Prime, you go by last year's DPU, 6.55 cents, US cents per share. That gives you a dividend yield of like 29.1% on today's share price. They have about 82% of the loans on fixed rates. And then for Pacific Oak, the DPU last year 5.8 for the whole year, 5.8 cents for the whole year, US cents, and that translates into a 17.8% dividend yield. And they have 77.9% of the loans on fixed rates. As you can, if you see from the very, very high dividend yield, the current investors' anxiety over the US REITs are still very apparent. Okay, and Prime was when ex-dividend on the 15th of February. So the next dividend payout, it will be for the half year ended June. So we'll get the result maybe nearer to end of this month, and then the payment will be done also near to that date. The ex date will also be near to that for the next dividend. So there's another question also on Manulife US REIT. What's your comment on Manulife US REIT? I'm not quite sure if I'm speaking what Darren's view on Darren's view, but personally, I felt is that the news flow continued to be negative. Manulife just also recently announced that one of the tenants is want to vacate the place, their office space by early next year. So there's continuously will be negative news flow out from the US on the US office sector. So at the moment, we think is probably not ideal to invest in this space right now. We probably look for more clarity at the interim results, which will be released, which will be announced this month to ascertain where does the asset value, how has the asset value reacted to the higher interest rates. Some maybe not all the REITs will have a revaluation of their assets by June, but at least we have an indication of where it's heading. Then we'll probably get a better picture of when is a good time to get into the office sector again for the US market. Thank you. Okay, there's a question on okay, in the Ukraine right now, and witness some more damages on office buildings. Does any of our REITs have properties here or in any part of the Ukraine? Thank you. Okay, no, just browse through all the assets. None of them has anything in Ukraine. The nearest is Cromwell. Cromwell has some office properties in Finland and Poland, just right at the border. So most of these properties have been affected. In terms of vacancy, it's very high. Nobody goes back to the office, and the value has probably also fallen off. So those are some of the bigger assets that Cromwell has. But otherwise, we don't see any other REITs with assets in the Ukraine. For the Singapore companies, maybe only Food Empire has operations in Ukraine. Okay. I think that's all I have. I'm not sure whether do you want to comment? Please comment long term for SGX.
Oh, okay. So let me answer this last one. Your view on your view on HP. I think hotel properties. Yeah, sorry, we don't really have a answer for that. Okay, we answered this last time before. If Zane has anything, so what's the comment? What's your long-term comment on your long-term view on SGX? Okay, so for banks, okay, so for SGX, we are positive on SGX long-term, mainly for the derivatives and their OTC FX. I think for securities, I think we all know the number of delistings happening. We did a check actually, although they say there's 600 plus listings, but most of these are pending delisting. Some of these are suspended. So if you just look at stocks that are actually trading, there's only like 500 plus stocks on the SGX, and it continues to shrink. So I'm not so sure whether the securities part there is positive, but on the derivatives and that they are getting global flow. So that's the most critical, because if you, like we highlighted before, if you on SGX local market, they need most of it is domestic flows. But if their products is derivatives and even OTC FX. So those you can capture global flow. So that's fine. Longer term for banks, of course, Singapore banks is obviously going to be a positive. It's probably it's basically an outlook on how where we see Singapore too. I mean, if you're negative on Singapore banks, then it's probably on the apart from that, really not much for me to comment because I'll leave it to Glenn when he comes back. Yeah, thanks. Anything wrong with Phillip? Fundamentally, prices keep dropping, a bit of course. Yeah, I think we mentioned that we don't think the results will be strong the upcoming second quarter. If you recall, the prior year, the results was some surge very strongly because so Wilma did well because palm oil price went up, and also just a reminder that they did benefit from this one-off benefit in a way because when the palm oil export quota was shut, I think they managed to get a lot of inventory, and then when they reopened, they benefited on that. Because if you recall last year, Indonesia had an export ban on palm. Then they benefit from that situation, inverted commas. So just I think investors don't think the results year on year will be quite weak. Will be probably very weak. Not only for them, but for all palm oil companies, because last year, palm oil price hit a record of 6,000 plus, if I'm not mistaken. So similar to the commodities ETF, I think commodities in general are all very sluggish, and that's what's pulling Wilma and the rest down to. Okay, Zain, you have anything else? If not, we'll try to I think we did answer most of it.
Nothing more from me.
Yeah. Okay, so thanks, everyone. Sorry if I might have missed some because someone they did announce. I'm not sure which is it referring. But if you do have more questions, just go to our community and we will try to answer your questions. And apologies if we didn't take on some, because sometimes we need to do a bit of background check before we answer you because you don't give you the wrong answer. With that, just thank everyone for your time. Hope to see you next week and hope everyone have a very good week ahead. And thank you everybody for your time and for your questions. Thank you, everyone.